Hi everybody and welcome back to the channel. If you're new here, my name is Brandon. Consider hitting that subscribe button. We post a video on investing in the stock market every week. And in today's video, we're actually going to be addressing a question that came in. I believe the comment was something along the lines of, how would you suggest investing for monthly income for a 60-year-old? And the strategy that we are going to be touching on and covering in this video, it doesn't only apply to 60-year-olds. In fact, this would work for really anybody out there who's looking to secure some monthly income. But the strategy that we're going to be covering in today's video actually entails dealing with equities. So we're not going to be talking about bonds, we're not going to be talking about GICs or term deposits and pulling in interest from your portfolio. We're actually going to be talking about dividends. And the strategy that we'll be covering is what I guess we'll call a staggered dividend strategy. And I will actually link this exact article that you're looking at down in the description below this video for you to check out. It's a relatively recent article dated March 1st, 2019. It goes on to talk about the exact strategy that we're going to be covering in this video. You can feel free to go check this out yourself. Before we do dive into this video, I will just point something out that I think is definitely worth mentioning. I actually find it quite funny when you hear about investors that are looking for monthly income, right? Let's say, for example, you're this said 60-year-old and you're looking to start peeling money out of your portfolio to finance your retirement. Maybe you want to go on a cruise or you got living expenses to pay for, whatever the case may be. Now, that doesn't necessarily mean that you need to invest in investments that generate monthly income, if that makes sense. And I guess a good way to explain it is that, let's say you had a portfolio here of $1 million. Now, if your portfolio generated you an average yield, if you looked at the average amount of income that you're pulling in, whether that be from dividends, whether that be from interest, from bonds, let's say your portfolio is yielding 3.5% on average. That's right about at $35,000 per year that you're going to be generating, that your portfolio is generating in income. Now, whether your investments pay that monthly, so that $35,000 gets split up between 12 months, so 3,000, 3,000, 3,000, 3,000, whether you get that in chunks of 4, if they get paid out quarterly, heck, if you were to get that all up front in January, a $35,000 lump sum, you still have the option of peeling that out month by month by month and just stretching that out throughout the year. I mean, you don't technically need an investment to pay you a monthly, generate you income monthly in order for you to peel that out month by month by month. You could just take those quarterly dividends, for example, or quarterly income and just spread that amongst 3 months, right? January, February, March. Do remember that you are the one that dictates when you peel the money out. You don't necessarily need that income to line up exactly month after month after month. Now, that said, I do see merit and I do see the appeal just for the peace of mind of having that monthly income. So in January, your portfolio generates X amount, you peel that exactly out. In February, you get your monthly amount and you peel it out. I do see why people like that. It does make things a whole lot clearer to invest in this strategy. So that's what we're going to be talking about today. And the staggered dividend strategy actually entails choosing stocks that pay dividends at different times. And keep in mind, if you hold a stock that pays a dividend, you're typically going to be receiving that dividend every quarter. So every 3 months, you're going to receive a little cash payment, a little source of income into your portfolio. Now, not all dividends are paid at the same time. Depending on a company's fiscal year, depending on their specific calendar. Take, for example, in the exact article that we're covering in this video, here are a list of companies that pay their quarterly dividends in the month of January, April, July, and October. So very standard, 3 months, 3 months, 3 months, 3 months. Now, if we do scroll down, we see a list of stocks, and these aren't all stocks. These are actually just what we'd consider dividend aristocrats, companies that have increased their dividend for, I believe it's 15 years, 25 years, 15 years. I'll pop up on the screen the exact number there. Here's companies that their dividend schedule, they pay out quarterly dividends on February, May, August, and November. And following that, we have a list of companies here that pay them out on the remaining months in March, June, September, and December. So if I were to just put up here on the screen a random compilement of some popular blue chip stocks that pay dividends on different schedules. That's why we'll call this a staggered dividend strategy. Well, very simply there, you could take the money that you invest in these 3 stocks, and of course this is a very, very dumbed down version here. I probably wouldn't suggest taking your nest egg and putting it into 3 stocks only. The point being here is that you could strategically build your portfolio so that in January, the income that you're pulling in from your Coca-Cola dividends, that income comes directly out. That's providing you with income in January. In February, you're pulling in your AT&T dividends, and then in March, you got your dividends from McDonald's, and so on and so on. So each month, you could literally just be pulling out the exact income that you're pulling in. And it's without a doubt a very cool and interesting strategy. It's one that I thought I'd bring up for this video, just as one that you've maybe never heard about before, a staggered dividend strategy. I'd very likely pair that with, of course, having a fair, if I'm talking here about a 6-year-old investor, I'd probably pair that with a healthy dose of fixed income or some sort of safer investment where I'm pulling in interest, a reliable source of interest or income that I can count on twice a year. You could maybe even look into something like REITs. But again, to me, if you're concerned with drawing out the monthly income from your portfolio, I don't believe you need to put as serious of an emphasis on actually lining those up month by month in terms of your investments generating that on a monthly income. I wouldn't go as far as stressing about finding, I need to find a mutual fund that has monthly distributions or an ETF with monthly distributions. Again, I'd more or less focus on picking the quality investments whenever that income does flow in, and myself as the investor, I'd be the one to dictate the actual amount that I'm actually peeling out or withdrawing from my portfolio, depending on what my particular needs are for that given month, or if I have a plan to take out X amount every month, that would be on me rather than putting that on the actual investments. But that'll wrap it up for this quick video. Hopefully, like I said, that gave you insight into a strategy that you maybe weren't familiar with before. If you've never heard of that, feel free to leave a comment down below. If you have any thoughts or opinions on a staggered dividend investment strategy, feel free to leave that down below as well. And if you enjoyed the video, feel free to give that one a thumbs up and subscribe for more content. We post a video here every week, so make sure you subscribe and hit the bell for notifications. And if you're interested in checking out our Investing Academy, it's that first link down in the description below. You can actually go ahead and schedule a one-on-one phone call with me. If that's something you're interested in, we can talk investment strategy, see if I can help you out in any way, shape, or form. But as always, I thank you guys for watching. I hope you enjoyed the quick one, and I'll see you in the next video.